Cord. Welcome out to the Blue Sky Training Lab. This is Coach Matt. We are going to be talking about set method application here today. And we talked very briefly a few weeks ago about what is the set method. We talked a little bit about it through the application lens. But when I was on Tuesday night when Phibbs was giving his presentation on Tuesday night, and I thought Phibbs did an absolutely wonderful, wonderful, wonderful job. He mentioned the set method, and we had a little bit of a conversation in the chat regarding the set method and getting better at the set method. And I remember, asking the question in the chat during Phibbs' presentation, how familiar is everybody with the set method? And I'll ask you guys here today, when I say the set method, scale this 0 to 10. 0, you do not know what the set method is. 10, you are an expert wizard who should be teaching this lab what the set method is. How would you personally describe yourself? RQ is like, I am set on gold. It's going to the moon. I'm set. I'm set on gold. It's going to the moon. I'm with you there, brother. I'm with you there, brother. All right. So those of you that are very new to the conversation of a set method, once again, if we can take you from not knowing anything about the set method to by the end of this conversation having an understanding of what the process is and how to navigate it, would you say this was a wonderful lab? Yes or no? Of course, of course. Well, you got to just put that out there. You know what I mean? So let's get right into it here today. When you're talking about the set method can be traded, and the philosophy of the set method could be traded on any single time frame. Whether, yeah, sarcasm is absolutely acceptable, just the tip. Absolutely acceptable. Memes, sarcasm, jokes, funny is absolutely acceptable. There is only one thing that I will never tolerate in this lab, and everybody knows that who has been here. We always support one another. We do not allow negativity to impact other people's journey in their learning how to trade. Can we all agree with that? That is a hard rule for me. That there's a hard line in the sand, and my A-type personality will get very aggressive if I see it. We can have fun, sarcastic, joke around, make fun, all of that jazz, but we have to support one another. A lot of this journey, I said it in the stream earlier today, a lot of this journey is finding like-minded people that you can hang out with, learn from, navigate with, have great conversations with over time. And that's what we're trying to build, not only in the streams we do every single day. That's what we're trying to do in the nightly coaching shows. That's what we're trying to do in this lab as well. And so have fun, but we have a lot of positivity because this is about learning and getting better and being more constructive along the way. And I feel like there's some amazing traders at Blue Sky. I think there's amazing traders in this lab here today that are cutthroat, amazing killer traders. And as such, we also have new traders in there that we want to get to the point where they're cutthroat, amazing, great traders long term and not just getting in and out of the market. And so appreciate you guys understanding that role. Let's talk set here. The set method of trading is it's a standardized process, is how I think about it. There's certain things that you need to get before you process a trade. And so a lot of what we do is doing all of the analysis in front of a trade. But once you have your level, you have your pattern, you have your trade idea, it's not good enough to just go say, if you break resistance, I'm buying. It's not good enough to just go say, if you break support, I'm selling. It's good enough if you say, I'm buying because of this rule. I'm putting a stop loss based on this rule. I'm targeting based on this rule. And if my entry to target is 2 to 1 greater than my entry to stop loss, then you have a good trade. I cannot tell you how many times in my life that I thought I had a great trade, that I was looking at the technical condition. I'm like, oh man, that is a pristine entry. That is an amazing entry. But then when you go through the process of actually structuring the trade plan, you are like, oh, it might not be a great trade plan. And so when you're thinking about the SEP method is a standardized set of rules that you apply every time you go to make a trade. Every time you go to make a trade, you should know what your entry is based on what your personal rule is. You should know what your stop loss is based on your, I'm saying it right now, Gabber, what your entry, E, entry, S, stop loss, T, target. So the set stands for stop loss, entry, and target. Those are the three things you have to get before you make a trade. And they have to be based on your personal rules. And so, oh no, 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 Gabber, you're perfectly fine. You know I got some sexy slides here, Gabber. You know I'm gonna bring the A game here on the sexy slides on the set conversation. But before we do that, I just want to get into kind of the process here. When you're looking at a trend and you're saying, okay, I got a great breakout here, got a W formation, I got a great breakout right there. I'm going to take that breakout and I'm going to put my entry right above the breakout channel. For a lot of traders, that's where the end of the analysis. That's the end. Is once they get their entry, that's the end of their homework. That's the starting point. Getting your entry is step one. Where is your entry and why? Do you need to see confirmation above resistance and why? What is your personal rule to get in? Do you need to see a close above resistance? Do you just need to see the price go above resistance? Do you use a percentage of the ATR above a candle high to get in? Every trader has different rules for entry, ladies and gentlemen, but it's simply not good enough just to say if it goes above resistance, we're going to buy. That's step one. That's the entry. The question becomes, where's the stop loss? Where are you going to target? And so when we're talking about trends, patterns, support, and resistance, that's all the analysis that you're making going into the trade. That's why you like the trade. You like the trend, you like the momentum, you like the pattern, you like the level, whatever it is you like, that's all about your entry. You're always thinking entry. You're always doing all of your analysis based on when you're going to get into a trade. Where am I going to buy? Where am I going to sell? That's what dominates the mindset for the new trader. For the professional trader, that's not what dominates the mindset. What dominates the mindset is pattern, level, and then entry. And then once we got our pattern, we got our levels, then we're thinking, okay, here's my entry, here's my stop loss, here's my target. And so when we're talking set method of trading, it is a process to make sure that you as the trader are always going through the analysis to completion to ensure that you have number one, a probable edge, and number two, a higher return than risk ratio. See, if you love the trend and you love the pattern and you love the support level, it doesn't matter if you can't structure a trade where you're getting at least two for every one of risk. And so the end conclusion of the set method is to determine whether or not all of your analysis is actually a good trade. And so when you get your levels and all of your analysis done, you assess entry, stop loss, target, and you determine what is your return versus risk ratio. And step one, if you got the edge on the technicals, you're good enough. Step two, if you got a positive reward to risk ratio that is 2 to 1 or above, at that point, you put the trade on. Now, what I love about the set method, guys, is there's an old philosophy in trading, and it goes to kind of our mindset in dealing with financial situations and money in general. When we have money to be made, do we get excited? Yes or no? When we see a good trade set up and we think we're going to make money, do we get excited? Of course we do, right? Of course we do. It would be illogical for us not to show some emotion there, right? And when we take a loss, do we get a little bit of fear? Yeah, of course. We get a little bit of fear, right? And again, that emotion impacts all of us. And I've said this a lot of times, but and we've talked about this in the lab before, but if you'll go back to prospect theory basically states how we as human beings behave over loss or gain. And when we're in a trade, if the only thing we have structured is the entry, and we start making money and our profit is going up, how many times have you guys sold simply because you had profit? And let's be real with each other. Let's be honest with each other. How many times have you guys closed a trade simply because it was green? Okay. Just to watch it do what you thought it was going to do before you ever even made the trade. Yes or no? Okay. So we've all done that. Me too. Me too. Okay. Me too. How many times have I cut off gold in a day trade there, RQ? How many times have you cut off gold in a day trade? It happens, right? It happens. No doubt about that. All right. How many of you guys have taken an L and the profit and the loss started showing red? And it was going up, but now it's starting to come down. And you're like, oh, I'm giving up my gains. I'm giving up my gains. I'm giving up my gains. And all of a sudden, you just close out just to watch it do exactly what you thought it was going to do in the first place. Okay, Nacho, earlier today, we've all done that one as well. All right, so the SEP method is a process of you going through all of the analysis to ensure that you know exactly where your entry is, exactly where your stop loss is, exactly where your target is. And I'm certainly not trying to attack anybody personally there, Tipped. Not in any capacity. Believe me, I do not pass judgment, Tipped. I simply talk about the things that impact all of us equally. You, me, RQ, Steve, maybe not Steve, he's cutthroat, but it impacts all of us equally. We all have emotion. That's my point. And so, about probably more than 40 years ago, but about 40 years ago, there started becoming a philosophy that started permeating throughout the financial space. And it was basically this. I want everybody to write this down. Set it and forget it. Everybody write that down. Set it and forget it. That's the philosophy of the set method. And it doesn't mean you don't trade manage, guys. It means you have your levels and everything predetermined. Because we know as human beings, regardless of how cutthroat we are, we all get emotional over price. We all get emotional over stop losses and targets and making money and losing money. And when our emotions are high, what else do we have a tendency to do? Do we have a tendency to make fantastic, amazing, rational, logical decisions when our emotions are high? No, we don't. Or do we have a tendency to make illogical, irrational decisions based on simple P&L? And so what the set it and forget it method was a way to prep the trade in front of where you had all of that emotional risk. And so the set it and forget it was to make sure that you get your entry, you get your stop loss, and you get your target before you ever even make the trade. So that when the trade is going, you have a plan and you simply trade the plan. You don't overreact to any doji in the middle of a move or a slight downward drift in the middle of a move because your day trade didn't just go parabolic, for example. Markets have a tendency to spike, consolidate, spike, consolidate, spike, consolidate. And so a lot of times you're just getting out of a trade in the middle of a move simply because you don't want to give up your gain. When the number one rule of trading is don't lose money. The number two rule of trading is trade with the trend. Okay. And so the SEP method allows you to execute your trade plan in an environment where you have emotion. But when you plan the trade, do you have any emotion? When you're just first prepping the trade, before you ever even hit the button, do you have any emotion? None. You got no money to lose. You got no money to make. You're not in the trade. There's no emotion there. So think about this from an emotional risk perspective. Where are you more prone to make mistakes? When you're prepping the trade with no emotion, or when you're in a trade with a ton of emotion? You're more prone to make mistakes when you're in the trade. And so the SEP method stands for stop loss entry target. That's what it stands for. It is the three orders we need to get before we ever even make the trade. Now, the last step before you make the trade is to determine the reward to risk ratio. Now, at a minimum, at a minimum, you need to be having two return for every one risk. By the time you prep that trade, that's what you need. Now, after you prep a trade, if you don't have a 2-to-1 reward, do you try to modify the trade to fit what you want to do? Or is that kind of the telltale sign that you really don't have a great trade? You never, and I want to be very clear on this, guys. You never adjust rules while you're trading. Ever, ever, ever. You only adjust rules in back testing and when you're going through the history of your trades that show you certain things, mistakes you're making that can be corrected, things you need to enhance, stuff like that. But you do that through back testing, you do that through historical review, you do that through that process. But when you're in the trade, if you modify your rules to get in, or you modify your rules to change your stop loss rule, for example, just to fit a reward to risk ratio so that you can make the trade, that's emotion making the trade. That's not logic. And so, once again, the SEP method stands for stop loss entry and target. The three things I go through the process very simple. I get my entry first, I get my stop loss second, I get my target third. And then I've added a last step to the SEP method, and I call it actually the step method instead. And the step method is just one last point, and that's your position size. How much are you willing to put into the trade? How much are you willing to risk in that trade in totality against your portfolio? Now, I want to ask you, day traders, a specific question on risk rules. How much are you willing to risk of your portfolio on a single day trade? Percentage wise, Alpy, not a total figure. It will be a total figure, like it will be an actual number, but just percentage wise. Mine is 1%. If it's gold, it's full port tilt, right? It's full port long all the time, all the time, all the time, baby. Usually speaking, guys, day traders are 1 to 2%. Usually day traders are in that 1 to 2%. And a lot of times based on stop loss placement, you're not even sniffing 1% unless you're over leveraged. And so a lot of times you're looking at 1 to 2% risk factors. My personal rule is 1%. Okay. And so that's not position size rule. That is how much of your portfolio you're willing to risk if you are wrong. Let's talk entry very quickly. Your entry. Your entry is your anchor point. It is the anchor point of all of the analysis. And what I mean by that, guys, is how to calculate reward to risk ratio is using your entry point. To calculate reward, you go from entry to target. To calculate risk, you go from entry to stop loss. Now, obviously, risk graphs can do a lot of this for us and so on and so forth, but that's the anchor point. What is your entry rule? Now, as a day trader, let's go into the market a little bit here. As a day trader, what is everybody's rule as a day trader? Everybody tell me your entry rule as a day trader. And if you don't have one, just tell me you don't have one, and that's perfectly fine too. We're here to get better. What is your day trading entry rule? Make money. Don't short calls. Oh, I love you guys. Don't buy the top of the wick. Let me see some more. Everybody put in your day trading entry rule. Come on. This is a lab. You're not here to listen to me lecture. You're here to participate. For me, as a day trader, it's simple for me as a day trader. To me, and everybody's a little bit different here, guys. Everybody's a little bit different. But to me, it's ultimately a question of do you need to see confirmation or not? For example, everybody trades their levels. Can we all agree with that? As a day trader, we all trade our levels, right? Whether it's a fib level or whether it's a old support, new resistance, or whether it's a bank level or an orb level or whatever, we all trade our levels. Okay. So what I'm talking about actually is not what level you're trading because we all trade our levels. What I'm talking about is do you need to see confirmation above or below your level, or can you be aggressive in getting in your entry? That is only a trader, only you, the trader, can answer that question. So, for example, if we're looking at a scenario that I was looking at earlier today, I was looking at this 6,700 number, and that's a level for me. That's a level for me. It's a significant whole number. I've seen it play a role multiple different times recently. It's acted as old support and old resistance multiple different times. That's a level that I've anchored to here over the last couple of days. And I was looking at the 6,700 level earlier today, and we had a nice little sell off coming into that level. Now, I was looking at that level and I was saying, okay, I am taking a trade underneath 6,700, but is that good enough for the set method? Just saying I'm taking a trade underneath 6,700. That's not good enough. That's not a rule. That's not a specific rule. That's more of a guideline, right? I want a specific rule. So to me, if there's a battle zone, if I kind of feel like there's not a real clean edge, if I don't feel like there's a momentum condition, if I feel there's some shaky support levels or whatever the case might be, I'm going to say this very simply. I'm going to say I need to see a close under that level. I have to see that close. Now, I don't need to see it close on a 15-minute chart. That's not what I need to see it close on. I need to see a close on my execution time frame. See, I do a lot of my analysis on the 15-minute time frame. And I'll say for the 50th time in this lab, if you're not using the 15-minute 9 EMA as a guide, then you need to probably adapt the 15-minute 9 EMA as a guide. But I'm looking at 6,700. And at that point, I'm saying, okay, let me get on that 5-minute chart. Let me get on that 5-minute chart here. Now, as it kind of closes then underneath the 6,500 zone here, yeah, excuse me, let me go forward a little bit. As you see it kind of battle here now on the 5-minute chart, you see the battle take place. Now, when I was looking at all these wicks, my opinion is at 6,700. As I'm looking at all these wicks right here, what does all these wicks tell me? Does that give me confidence that I can be aggressive in my entry, or does that give me caution that I need to see a confirmation close? I don't like that battle. I don't like that wick battle. I don't like wickety wick nonsense. That's not what I like. I like clean stuff. I don't like battles here. And when I see that wickety wick stuff, I say to myself, I need to see a close underneath 6,700. You got to clean up those wicks. And the only way to clean up those wicks is to work down. And so I told myself I need to see a close underneath 6,700. And so once I get the close underneath 6,700 right here, does that clean up the joint a little bit? Right here. Does once it closes, does it is there still a battle taking place, for example, once it closes? There's no battle. The Bears won. The Bears won. There was a battle above 6,700. The Bears won. Okay. Bulls aren't fighting anymore. And so at this point, I can be aggressive and I just get that entry right underneath the low. Does that make sense, everybody? Ivan, anything is possible, brother. It's based on probability analysis, and I would disagree with your comment. Okay. So, entry technique, coming back to the set method, entry technique to me is a conversation at the level and whether or not you need to see a close, i.e., confirmation, or if you can be aggressive underneath that level. If I have a lot of confidence in the level and it's been dialed in multiple different times and I'm not seeing a wickety wick nonsense battle, I think you can be aggressive in getting it right underneath the level. I just don't think this is that analysis. Does that make sense, everybody? Once again, Ivan, anything is possible. I don't trade your possibilities, brother. Okay. So, entry technique. Entry technique is for me level confirmation. That's kind of the conversation that I personally have. Now, once I have that, the next question is what? Coming back to the set method. Once I've determined my entry, what's the next point of the puzzle? Let's talk stop loss, right? Let's talk stop loss. And Nacho, you can certainly go target first. Okay. You can certainly go target first. Certainly go target first. I like to think about defense before I think about offense. I like to think about what I'm going to potentially lose if I'm wrong before I get into what I'm potentially going to gain if I'm right. I like to be in that frame of mind. I don't think everybody has to be in that frame of mind. Everybody's going to be a little bit different on that. But I do think for me, it helps me understand the risk because I feel like if I can control my risk, the return will take care of itself. Does that make sense, Nacho? And Ivan, honestly, you and I are probably saying the exact same thing, brother. That's what I'm saying. When you see all those wicks, like I'm right there with you. I'm like, no, like that thing could get rejected, and there's a battle taking place there. But at some point, the trader has to say somebody won. You know what I mean? And that's what the confirmation process is all about. And like every trader might be looking at the different level a little bit differently, but that's where confirmation can clean up that debate. Once you have confirmation, there's like price can do whatever price can do, but once you have confirmation, there is an edge for follow through. You know what I mean? Okay, and so stop loss. Now, stop loss placement as a swing trader is very specific to level using a percentage of ATR. And so the swing trader will use ATR a ton in everything. I can't trade swing trading without utilizing the ATR. Day trading, I don't use the ATR nearly as much. For example, as a swing trader, my standard rule. as a swing trader is 25% of the ATR under support or 25% of the ATR above resistance if I'm looking at a swing trade on the downside. That's a specific rule to customize my stop loss rule for every single swing trade that I ever make. Every swing trade I make will have that rule associated to it. Great question, Alfie. And if you don't know what an ATR is, guys, please let me know in chat. ATR stands for average true range. It is a statistical measurement of the last 14 candles to where from the high to the low over the last 14 candles to tell you statistically how far a stock, a commodity, an ETF, whatever it is that you are trading, how far it moves on average from the high to the low on a given day. And so it really helps us understand the totality of volatility of that instrument. And so, for example, somebody give me a couple stocks that you guys like. Just give me a couple stocks you like. Tesla. Okay. So, Tesla. Let's go to the daily chart and go to the indicator section and let's just add ATR right there. See ATR? We're just going to add the ATR and I'm going to show you that. That's a great question, by the way. I don't like the wilders personally, but it's not that bad. I'm going to go to simple, apply. All right. Now, do you see how the ATR has been going up, 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 up? It currently has an ATR of $20. What does that tell me? It tells me from the very low of a candle to the very high of a candle, on average, over the last 14 trading sessions, this stock moves $20 from the high to the low. That is your average daily range as a trader. And so, as a swing trader, for example, if it goes to the average daily, you kind of feel like the price is done. As a day trader, that tells you how much range you truly have on this instrument from the low to the high price every single day. So, Tesla trades $20 a day. Now, is Tesla a volatile stock? Yes or no? Is Tesla a volatile stock? Yeah, it is. Now, how do we know that though? Without even without the experience of trading Tesla, because anybody who trades Tesla knows Tesla's a volatile stock. But how do we know it without trading? There's two ways. Okay, there's two ways. Number one, you take the ATR and you divide it by the price. Everybody take the ATR and divide it by the price. What is $20 divided by 428, the current price? This stock moves 4.6% a day. It moves 4.6% a day, every day. Now, that's volatile. If the market on average moves less than a percent and this stock moves 4%, this is a very aggressive stock. What that tells me is that if you're a conservative trader, should you ever trade Tesla? Ever. If you're a conservative trader, no. If you can't stand a daily range on the S&P 500, you think you can go four times that on Tesla? Not a chance in the world. Not a chance in the world. And so it's volatile. The second way, and it's actually a much easier way, the second way to determine how volatile a stock is if you'll go to the option chain, this number right here. What's that number right here? Excuse me. This one right here. What's that number? 69.10. That is implied volatility. Anything above 40 on IV is a volatile stock. And so you know what you're dealing with. And so ATR is kind of a measurement of volatility is what it is. It helps us understand the statistical range between the high and the low over 14 candles. And so if you're looking at on an intraday side of the equation, say the 15-minute chart, the 15-minute range from the high to the low is $2.79. And so it helps you understand the totality of volatility and what it can really help you do when you combine ATR with your entry rules and your stop loss rules specifically is this. Every stock Every ETF, every index, every commodity, every currency, every asset in the market has a different volatility skew. Every single one. They all trade at the volatility of the traders that trade that instrument. Every single one. And when you're looking at the types of when you're looking at these aggressive ranges, obviously active traders love to get stocks that move more. Can we all agree with that? As an active swing trader, I like to get stocks that move personally. I want to see stocks that move more than the market as an active trader. I don't want to see a stock that moves less than the market. For example, if you come into, say, let's go XLRE, for example, this is real estate. Now, how much does XLRE move on a day in, day out basis? It moves 44 cents. 44 cents, which means XLRE moves less than 1% a day. So, do I ever trade XLRE? Ever? I don't. Ever. Why would I? It's boring. I'm bored just looking at it. So what ATR can do is it can help us understand the volatility of the space, the stock, the personality of the stock. But where the real power in ATR is, guys, it's in customizing your rules for entry and stop loss. That's where the true power of ATR is. Because like I just said, each one of these stocks have different personalities. You cannot force your personality on this instrument. This instrument could care less who you are. This instrument doesn't know you. They're not going to interview you. They're not going to say sorry if they take their money. They're not going to say great job if you make money. There's no emotional context to this. And so what ATR can do, if I'm going to, for example, let me put it like this. If I have an entry rule that says I buy $1 above resistance on any stock trade. Is that a rule? Because rules have to be repeatable. Okay, everybody write that word down. Repeatable. Rules have to be repeatable. You cannot create a new rule on one stock and then create a different rule on another stock. Rules have to be consistent. They have to be repeatable. You have to be able to apply your technique on every given stock, on every given commodity, on every given asset that you trade on. You do not change your personality. What changes is the ATR. And so if your rule is I buy $1 above every stock or above resistance on every stock. Well, guys, if you're trading a $10 stock, $1 on a $10 stock is a 10% move. That is you're buying after the stock's already made its move. Whereas if you're buying a $1, if your entry is $1 on, say, BlackRock that trades at $33 a day, that's nothing. So if your rule is I'm going to trade XLRE $1 above 42 and a half because that's resistance. Well, that's a vastly different rule than if you apply that on, say, BlackRock or Netflix or something along those lines. Some high dollar stock that trades, or Tesla that trades a lot. Tesla trades $20 a day. $1 to Tesla is nothing. Nothing. XRE, LRE trades 44 cents a day. That's a 2-day move. That's the equivalent of a 2-day move. And so what traders do, guys, is they take their rule and they apply an ATR filter to it so that the rule matches the personality of the stock or the commodity or the currency they're trading. So, for example, if I'm looking at a trade on Applied Material, which I am right now looking at a trade on Applied Material, it's a company I absolutely love. Now, if my rule is for entry, okay, we're still talking entry here. If my rule for entry is I buy once it goes 10% of the ATR above the high. I need it to clear the high, guys. 1 cent to a $232 stock is nothing. If you just say I'm putting my entry 1 cent above the high, you might as well just buy right now. You're not getting it on an edge. Okay. And so the rule is 5 to 10% of the ATR above the high. So let's just say we do it at a 10% rule. Well, if the ATR is $9.60, what is 10% of $9.60? It's 96 cents. If the high of the day, and I'm talking more of a swing trader than I am a day trader here, but if the high of the day is 232.07, because you got to get it with confirmation, guys. You don't get it underneath, you got to get it with confirmation. So if the high of the day is 232.07, the swing trader in me wants to get involved as it breaks the high. Does that make sense, everybody? I don't want to get in a swing trade underneath the high. The day traders have to be successful before the swing traders are. Okay. So I don't put the order 1 cent above the high. I put the order at 10% of the ATR above the high. That would put the order at somewhere around 233.05, somewhere around those lines. And so I always, in swing trading, I always use an ATR rule to personalize the entry rule to fit the personality of the stock itself. And so, who asked what is an ATR? Because I think we should all say thank you. That was a wonderful question that allowed us to have a deep conversation on the importance of ATR. So whoever asked that question, gold star for you today. Well done. Does that help you guys understand the importance of that ATR? Because it will customize the entry rule to fit the personality of the stock you're trading. Not as important when we're talking about futures. When we're talking about day trading futures, remember it was more about confirmation, be non-confirmation, and getting those orders in pretty close to when they break the wicks, pretty close to when they break support. Those it's a little bit different. So Ivan, stocks are also traded differently because you can't come to any instrument trade one contract like futures. Completely disagree. Completely inaccurate. You can trade one share or a billion shares. You can trade one contract or 1,000 contracts. The stocks don't trade any different. Futures are extremely similar to stock. Both have options, both have shares, both have everything. And so I just gonna have to disagree with that one there, Ivan. It's just not accurate. All right. So, but let's come back down to the stop loss now. Okay, so we got our entry. Now, and again, guys, I just kind of feel like it's my role to make sure that when things are said, that we all have an understanding of exactly what that means. And as somebody who has lived in the stock and the options market for 20 years, I can tell you, there's a lot you can do in that market, and they trade very, very similar to how futures trade. Everything is a position size rule. Everything is. I understand that, Ivan. I do understand that. Good point. Good point. Okay. Now, stop loss. What is a stop loss, guys? Does everybody here use stop losses, like dedicated stop losses that you put into the market when you make a trade? Does everybody do that? I need to see a yes out of everybody. Even RQ on gold does. In fact, I believe RQ, you said you got stopped out on gold today after that 12-hour move. Is that true? Last night? Oh, yeah. No. It was a good trade. RQ had a great trade. He had a great trade. But yeah, we all get stopped out, right? Because when we get stopped out, our stop loss is doing the job it's supposed to be doing, right? It's supposed to stop us out. Who here uses mental stops? Does anybody here use mental stops? That's a great answer, Nacho. Short time frame, yeah, TP. I'm kind of with you there. I don't use mental stops personally. Um, the reason being is I am a deep analytical technician, deep, and I will overthink it to a billion different degrees instead of just allowing my stop loss to do the work. And so I'm a big believer in stop losses, guys. Like, because every time I've used mental stops, and the lower the time frame, I do agree that sometimes when you're scalping tipped, you kind of do. But for me, mental stops have never really done the trick for me because out of all the times I've used a mental stop, yeah, sometimes it works out. There's no doubt about that. But there's other times I've compounded the problem pretty bad. And those have taught me some very valuable lessons that, Matt, you're not smarter than the market. I'm not smarter than the collective intelligence of the market, ladies and gentlemen. I'm just not. I know sometimes we like to think we are, but I'm not. And if the markets, and if I'm going to get into a trade because it violates a support level and it comes right above that and it comes right back up above that support level, I'm wrong. And if I'm wrong, I just want to get out. If I'm proven wrong, I just want to get out. I want to constantly be able just to take a small loss because as part of all those rules of trading that we talk about, that 2-to-1 reward to risk ratio and so on and so forth, that old rule going to the back to the prospect theory, you got to let winners run and you got to cut losses short. And the best way to cut a loss short is just to accept when you're wrong. And the easiest thing to do is to put a stop loss at a level before you're even in the trade so that you don't have to debate yourself whether or not you're wrong or not. Because you're debating yourself when the market is also saying you're wrong. Does that make sense, everybody? And so for me, and again, like I've seen a lot of great traders use mental stops, and I'm envious of them because I just personally can't because I just overthink it and I start debating myself. And I'm like, why am I debating myself on this failed trade when you should just go find a better trade? Like, who's with me on that? My mentor, my options mentor was a guy by the name of Micah Brooks. He was a hedge fund manager. He was a wonderful option trader, one of the best option traders I ever met. And on day two of me mentoring with him, we were doing some live trading in the options market. And I kept overthinking it. And I got stopped out on something. And I kept arguing with Micah that I was right. And he says, Matt, you've been arguing with me for an hour. And in that hour, while you've been arguing with me about why you were right, did you make any money? I said, no. And he says, did I? I said, the money I paid you. And he started laughing. He says, no, that's not what I meant. And he said, have I made money sitting here trading while you've been arguing? Micah had cleared out $50,000 in day trading the NASDAQ. And this was 15 years ago, guys. Actually, a little bit more. While I sat there and argued with him about why I was right on a failed trade, he was making money. And as a mentor, and Micah was a wonderful mentor, he was not trying to show me up or do anything like that. He was trying to prove a very, very important point. If you would have just taken the loss, you could have taken that next trade with me. Does that make sense, guys? And that taught me a very valuable lesson. You don't have to make the same money you lost in the same trade. You don't have to get stuck. There's no rule that says you have to get stuck. If that time frame's not working out, take a walk, let it cool down. Patience is a position, guys, even in day trading. Absolutely, Fibs. And that's what I was, Fibs, right? When you argue about a failed trade, aren't you married to the position? You're not dating that position. You're married to it. You're arguing about why you were right, why they were wrong, why the market took your money. And the whole time, you're just not doing the things you need to do to go out there and make that next trade. And so mental stops just, they don't work for me. And again, they do work for other traders. I don't recommend them. You need to be very good, very quick. But to me, I kind of it was trader, it was bond. But to me, I kind of feel like you get a stop loss in the market right then, right? And you allow that stop loss to do the work. Because I said that's where I want out. That's where the analysis changes. And so coming back to that applied material situation, we got an entry above the high, 10% of the ATR above the high. This is a standardized swing trade, by the way. 10% of the HR above the high. My personal rule is 5% of the HR, by the way. It's not 10. My personal rule is 5% of the ATR. Now, stop loss. The ATR can help you really customize stop loss too. My personal rule is 25% of the ATR underneath support. You, as the trader, have to determine where that support is. Now, as a swing trader, I want that to be as tight to the level as I can. Okay, as tight to the level as I can. And so whether you're using, for example, the previous breakout channel, which I would not do here, for me, I look at the 9 EMA and I put a stop loss 25% of the ATR underneath the 9 EMA. That is my risk. Now, the last step after you get your stop loss, and as a day trader, let's go back to that because that's the swing trade example. As a day trader, let's go back to that ES example we were talking about. Now, when the market closed underneath 6,700, okay, we know where our entry is here. Where would you personally put a stop loss on this day trade on the ES, the one when it broke 6,700 here today? Where would you put a stop loss? By the 9 EMA. It's a good level. 9 EMA on the 15 was a little high for me at the time. I will use the 9 EMA as an adjustment though. I did not one on this one, but I will use it typically. I think it's dealer's choice, honestly. I think there could be a lot of different answers for stop loss placement here. Everybody's going to be a little bit different. I think it's important to understand where the logical levels are, right? Where could you logically place a stop loss? The ultra aggressive trader here will look at the 6,800 zone or 6,700 zone and say, "Get me a stop loss under right above 6,700." Okay, it's the previous breakdown. It's the level you were breaking down. The most aggressive trader will say, "I want that right above 6,700." I don't love that stop loss. I think you got to give it a little bit more room, but that is a very, very aggressive stop loss roll. A level that gets broken, according to the principle of polarity, old support, which this is, will act as a new resistance level. And so getting any stop loss above that level is a minimum, I would say, is a minimum. I like the 6,800 zone. We're not there yet, though, not show. That would maybe be a little bit too much risk, my friend, at 6,800. I think the second logical stop loss placement is right above the pattern resistance level. Do you see these three wicks right here, guys? How they're all kind of simultaneously at the same level? Yeah, that's kind of the level. And Kinster, that's a good point. That's a good shout out because that's kind of what the candle high. You're basically playing the bar here. But it also coincides with that high, coincides with that high, and you also got the 9 EMA here. And so you got the 9 EMA working for you here. You got the tippity top here. And so those are the two logical stop loss placements for me is agreed a ton, Bond. Agreed a ton. But those would be the two logical ones. You would have an aggressive one right above the breakout channel, and then the second one would be above the total of the pattern. Does that make sense, everybody? Okay. Now, once that stop loss is in the market, do you ever adjust that stop loss up? Ever? We're shorting here, obviously. No, that's breaking a rule, guys. You're breaking a rule to justify the fact that the market came right back up, right? You only adjust it down. Canster's 100% right. You adjust it down. You adjust it with the trade, never against the trade. Once that stop loss is there, that is your max risk. You can't adjust it up. You took your max risk at your stop loss. It will teach you valuable lessons, Ace. If you adjust counter stop loss, it will teach you valuable lessons along the way, no doubt about that. So once again, we only adjust the once stop loss is in the market, we only adjust stop loss with the trade itself. Is everybody good on that? Okay. Now, before we talk targeting here, the final of the set method. And are you guys having fun so far today? Are you guys learning a lot today so far? This has been a good conversation. Everybody good? Okay. We're at time. Does anybody mind we go over time a little bit today? Awesome. RQ, lies, lies, RQ, lies, RQ. All right. As the trade starts working here, guys, okay, as the trade starts working, when's the first time we adjust stop loss? When's the first time we adjust stop loss? I don't adjust stop loss until one or two things happens. Okay. And this is just me personally. Okay. This is just me personally. But I don't adjust stop loss until after I get the 15-minute 9 EMA to get me into some degree of break even cost. Now, I'm a little bit more conservative than a lot of you guys are on this stuff. My time frames are typically a little bit longer than your time frames. I've noticed that a lot. When a lot of people are talking about, I'm taking this trade, I'm taking this trade. There's a lot of people at Blue Sky that trade on shorter time frames than me. And so for me, I don't adjust that stop loss initially until that 15-minute 9 EMA on a breakdown, on a breakout, either one, until it gets to break even cost. And that will typically be, quite frankly, after the first pullback on the 5-minute chart. Does that make sense, guys? Okay. And I will adjust throughout the time period on that 15-minute chart. I only adjusted my stop loss twice here today on this trade. Actually, this first trade was a very quick one, to be perfectly honest with you. I got stopped out. I didn't get stopped out. I actually closed the trade on this first one. The second one that I pulled the trigger on today was this pullback right here, this one right here. And I did officially break even on that one when it came back up. And so had a good trade on this first one. The second one, I did adjust and I got stopped out at right around that break even price on that second trade. That was the one during the power hour. All right. So stop loss, you get it in there initially. You adjust only when your system tells you to. And if your system tells you to adjust on the candle high, adjust on the candle high. If your system tells you adjust against a moving average, adjust against a moving average. If your system tells you to adjust against patterns, like I think I saw Canster say after the first pullback, adjust against the first pullback. Whatever your system rule says on the adjustment, do you modify that when you're in the trade? Not when you're in the trade. You fix that rule if it's broken after the trade. Okay. Now, does anybody not have a stop loss adjustment rule? Or is everybody good? Um, Nacho, I wonder where you learned that from. Um, yeah, that's I do like the 9 EMA. I do like the 9 EMA too. Facebook's a good one too. Um, it's not, by the way. Facebook's crap. I shouldn't say that too loud. Meta's been a good stock. Um, but don't get me started on that, Nacho. But if you don't have a stop loss management rule, the easiest stop loss management rule, guys, is to adjust to break even and then trail against a moving average. Moving averages, especially the 9 EMA, it's a big time anchor for me, the 9 EMA on a lot of time frames, but my favorite time frames in the 9 EMA are the 15-minute nine, the hourly nine, the daily nine, and the weekly nine. Those are my favorite time periods on the 9 EMA. I used to not be a moving average guy. I used to be a pure price guy. Like I was pure price. Didn't care about moving averages, didn't care about honestly fibs, didn't care about Elliott wave, didn't care about any of it. I traded price. Period. End of sentence. I've adjusted that. Like I feel like the 90 MA and moving averages are more consistent now than they have been in in days gone by. The reason I say that is algorithms and which are a healthy dose of the overall. Uh, I love fibs, RQ. Both fibs the coach and fibs the fib analysis. No doubt about that. I'm talking about back in the day. I was just a price guy. I've certainly adjusted, my friend. I love Fibonacci levels. I use them all the time. Love, love, love. I love moving averages. I love my fib levels, especially retracement levels. Like the one thing I want to talk to Fibs about is how he uses the extension levels because I'd like to start using some of that in my own. I don't use the extension levels nearly as much as I use the retracement levels, and that's something I want to improve on personally. And I thought Fibs was excellent on Tuesday, and I can't wait to have further conversations on that because I saw how he was using them. I'm like, yeah, that's something I would love. No, I love fib retracements. Like I feel like I got a pretty good handle on how to handle the retracement side of the equation, but I just don't use extensions as much. And as I was watching fibs on Tuesday, I was like, oh, that is quite amazing. I kind of like that. I don't use the VWAP as much. I've started using orb analysis a lot more. And fib extensions and VWAP is kind of my next indicators that I want to start kind of putting in for myself. No doubt about that. I don't think we recorded that first session, Bond. Um, I don't think we did. I'm not sure though. I can't guarantee it, but I don't think we did. I don't think we did. All right. Now, the last part of the set method or the set method is the T, the targeting techniques. Now, as a day trader, how do you guys typically get your targets as a day trader? It's just level to level. Is that kind of where level to level type stuff? Fib extensions, fib retracement numbers, level to level. Okay. Yeah. So that's what a lot of day traders do is they use their levels, right? Level to level. And so targeting techniques are just level to level. Swing trading is going to be a little bit different. In fact, do you guys want to do a targeting lesson for swing traders? Is that something that you guys would be interested in? I find it to be a fascinating conversation, honestly, personally. It is different than day trading, but you can obviously use some of it. There's obviously commonality in everything. Yeah, I would Alfie definitely, 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 definitely. It doesn't mean you can't swing trade futures. Certainly people do. But I would say swing trading, and I can only answer for me on that one. And quite frankly, a lot of people I know, but yeah, I would say swing trading in the stock and options market is much easier to cut your teeth on than swing trading in the futures market. I find the Forex and the futures market to be really, really, really good day trading asset classes. Like they're the epicenter of great asset classes to day trade. I think a lot of crypto traders would throw crypto into that as well. But I would say the 24-hour markets are the real epicenter of the day traders, right? I cut my teeth as a swing trader. That's what I first started as was a swing trader. It's my first love in the market. It's really kind of been, something that I've never stopped doing. Like I take breaks from cash flow. And I don't take breaks from like covered calls or stuff like that, but I take breaks from like credit spreads and debit spreads. And I even take breaks from day trading, guys. I never take a break from swing trading. I haven't taken a break in 20 years on swing trading. I won't do it now. But I would say the stock and the options market are much better swing trading markets. Mind you, I've said this many times in the last 3 days. This is not a good swing trading environment. It can become one, but this is a really good day trading environment right now. It's not a very good swing trading environment. A lot of up and down, a lot of market trying to figure out what it wants to do with its life. And when the market's trying to find out whether it wants to entertain an ABC cycle or whether or not the market wants to recover, like that's just not going to be the best swing trading environment. But how about this, guys? How about next week we do a dedicated session on targeting techniques on the daily chart that swing traders would primarily use? Does that sound good for next week, guys? Little set method activity, but using swing trader specific analysis. I think you guys will enjoy it quite a bit. Um, by the way, extensions, Fibonacci extension is part of that, brother. Um, I use potential average yield. I'll teach you guys potential average yield next week. All right. So targeting techniques as the set method is basically levels to levels and so on and so forth. But the key point on the target is this. You need to have a minimum of two return for every one risk. So if you're willing to risk 10 points, you need to be assessing, not wanting, not hoping, not begging. You need to be assessing 20 points of return. If you're going to take, $100 of risk, you have to at a minimum be assessing $200 of return, right? This is your introductory into the set method. And did you guys have a fantastic time today? Did you guys learn a lot today? And the reason I'm cutting it off right now is because I'm doing a giveaway. Do you guys want to do a giveaway? Anybody want a giveaway? Yeah. Yeah, we're going to do some giveaways every week in the lab. Yeah. Yeah. Rebecca, are we ready for the giveaway? We're ready for the giveaway, right? Rebecca, we good? Okay. So do I just have to give them the secret code? Is that all I have to do? That's it? Not everyone, Nacho. That's not how it works. Okay. Now, I'm going to give you guys the code here in a second. And Rebecca, if you can kind of tell people, because we got some new people here as well, uh, whisper this. I'll whisper it. Okay, hold on. Hold on. The secret code is support. That is the secret code. Support. I personally find support is the most important concept in the entire market. Support, Support. Now, I almost went with Nacho. I got very close to going with Nacho today, but I couldn't do it. Couldn't pull the trigger. And you're right, Ace. Nothing but resistance, but support. So if you want to enter in the drawing, hit that link, put in support, and let's see. Who wants an eval? When do we announce this, Rebecca? Do we announce the winner here? This is my first time doing the announcement. All right, you guys got a few minutes. Support. Yes, Ivan. Support. Support. Anybody who wants to enter into the drawing to win the award, the giveaway, right? We're doing an eval. Put support. Rebecca will do a drawing and she'll announce it. Now, historically, I would just ask a historical question, and the first person who got the answer right would get it. Thank you, Mr. Positive. By the way, wonderful name. Love it. I'll give you guys a couple minutes. While you're doing that, if anybody has any questions you want me to give a take on, technically, fundamentally, market wise, I am happy to oblige. By the way, if you go to the announcement channel in the Blue Sky Discord, you'll see Makaram put a nice little link if you want to get reminded every week we go live in the lab. You can hit interested and get a nice little reminder every time we go live. So you never miss a lab. Thank you, Becky. Appreciate that so much. Um, there's a lot more we could definitely talk about, and we'll continue that a little bit next week in the targeting session. And maybe we do a stop loss session, go into a little bit of detail here. 24/5 Kenster, but yeah. No, I've actually done a couple sessions in the lab, and you can find them on YouTube, guys. We've done like what about 20 of these labs? They're all on YouTube. And I've done a lot of that, like the time periods of the day you trade, stuff like that. But everybody's going to have a different routine in the day because everybody has different life routines. I don't think there's one end all be all personally of you got to trade this environment. And I'm also the wrong person to ask on that because I trade throughout the day. Like I'll trade in the morning, I'll trade at night. I'll like that's I literally eat, sleep, and breathe this stuff, guys. I have investments, swing trades, position trades, day trades. I do things in commodities, currencies. The only thing I don't do is bonds. Like I just don't mess with them. Patterns are pattern, exactly, Ace. And so that's like the overlapping zones, like to me, it's just which one you like to trade. A lot of people love the New York session. The New York session lasts about 2 hours in the morning. You get an overlapping zone between Europe and the US there. And that's probably the most volatility you'll get in the day is during the New York session. You get a lot of price movement during that session. Obviously, that deals with the cash open and the economic reports and all of that jazz. Then you got like the power hour that we do the stream on every single day. Um, it's power hour has not proven to be nearly as, you know, a great trading environment, I'd say, as it has oftentimes in the past. These things do change, obviously, but right now, a lot of the price movement we're seeing is the cash open and the volatility ensuing after the cash open, and that's kind of what picks the trend. I personally love trading the overnight session. I know it's not everybody's cup of tea, but I definitely love trading the overnight session. Like I like trading around the Japanese hours, and that's the cross period there is Australia and Japan, and then you get a little bit of China. Anybody who loves gold, they like the Asian hours. Omaro, let's all give a good what's up. Great job. Happy for you. Everybody show some love to Omaro. They won. Well done. Enjoy the eval. Kick some butt. Well done. Yes, you did. You're the winner, winner chicken dinner. That's right, Jaja. That's right. Let the haters come in. It's okay. That's right. It's okay. We'll do another drawing next week. But well done. Well done, Amaro. All right, team. That's it for the lab here today. If you want to review this at all, it will be on YouTube tomorrow morning. So I will have it on YouTube and I will post it in Discord when the link goes live as well. You guys are the absolute best. You're the best part of Blue Sky. You guys, the community, the team, you guys are what makes this great. We just love being a part of your journey. And I truly do mean that. As an educator, I love being a part of your journey. I love being part of what makes that successful. And you guys are the best. We at Blue Sky are here to support your journey, to help you on your journey. And that's one thing I absolutely love about Blue Sky, guys. I've always felt education plus application is the key to success. And too often times people will focus on one or the other without combining them together. And Blue Sky does it as well as anybody out there, if not better than anybody out there. And I've been around this industry for 20 years, ladies and gentlemen. Education plus application is the key to success. And you get that in droves here at Blue Sky. And so I just want to say thank you for being the best part of it. If you need anything from me, send me a DM in Discord. Now, we have seen some fake coach match running around Discord these days. Okay. Do not accept a message from fake coach Matt. Discord is notorious for AI bots. Okay. AI bots are nasty. And if you ever have a coach Matt pitch you something or sound anything that is not like me, it's not me. Okay. Now, if you want to add me as a friend, add me as a friend. You can certainly right click on my name, add me as a friend, send me a DM. I'm part of the team here too. But do not accept fake Coach Matt messages. And I will never instigate a message. I'm here to support you and help you. And I have that rule for me because guys, I'm not kidding when I say this. I've personally had to remove at least 500 fake Coach Matts along the way in Discord. And so they're terrible. Don't accept them. Add me as a friend. Get around it. Make sense, everybody? No, I am not doubling the. I am not doubling the 5,000 in Bitcoin you sent me. No, 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 no. But some in Ethiopia is. Somebody in Pakistan is just a tip. Somebody is. That would not be me. I do appreciate you sending the 5,000 Bitcoin though. All right, team. You guys have a wonderful, wonderful rest of your day. If you need anything from me, hit me up. Later, everybody.